Ghulam Zia of Knight Frank. Ghulam, thanks so much as always for speaking to NDTV Profit and to me. What are you picking up at this juncture, heading into the end of the year? Would you say that in those pockets that I've mentioned, pricing remains a little bit extended, and so therefore demand is not necessarily what some might hope from the real estate space?
Alex, thank you so much for giving me this opportunity to connect with your viewers. The fact remains that in spite of a lot of those negative, inserts that were coming up that the real estate is about to fall, this festive season has proven most of them wrong. Well, the Navratra that we spoke about had 20% of a growth, at least in Mumbai market, compared to the Navratra last year. And in many other markets, even Gurgaon, Noida, Bangalore, most of these markets were remaining steady. The numbers were pretty good. Even Diwali, and mind you, this time, the Diwali time also, we didn't see any slowdown in this trend. And that's the reason we are saying, while you're absolutely right, in a few markets there was a little slowdown, but like Pune did show some kind of a flattening. But then negativity is, a lot presented than what's really happening on ground. So net, we feel that there was hardly any difference. It's flattish to say the least, but in a few markets, the performance was better than last year, especially in Mumbai, as I was talking about. The Navratra had 20% growth. Diwali did have almost about 2 to 3 odd percent growth, but nonetheless positive. Same is the case with Gurgaon, and it continues. Even after Diwali is over, the month of October, closure of October was better than last October, even in Gurgaon and Noida. So net, we are looking at either a flattish or slightly positive trend. No negativity anywhere yet, Alex. Over to you.
I want to ask you about three markets in particular, and you mentioned all of them briefly, but Delhi NCR, in certain pockets, a lot of people have talked about the price increase having been so dramatic that now for a while you're likely to see a little bit of a cool off in demand. Second, in the Mumbai metropolitan region and in the Bengaluru region, different trends are playing out. In Bengaluru, for example, there's a little bit of question mark about IT and the way that these professionals might be earning in this year and next. And they're a huge factor in the demand for housing and real estate. So is that likely to prove to be a little bit of a muting of demand? And in Mumbai, you're talking about the rehabilitation or the redevelopment space and the supply that's coming in from that perspective. Is that all of these factors put together likely to put a little bit of a brake on the pricing trends that we've seen?
Well, Alex, you're right. Pricing is a little too overheated. Like the price growth that we have seen, Delhi was the highest, and especially Gurgaon, even Noida, we have seen higher, in fact, almost about 15–16% growth in Gurgaon alone. Noida also is not far behind. So net price rise has been worrisome, to say the least. Even in Mumbai, most of the pockets, the price growth has been closer to double digit in last 1 year. Bangalore has also been above double digits. It's actually about 11–12 odd percent, more than 10 odd percent. So this is net, you bang on, the price rise has been huge, and that is throwing affordability out of the window. However, as long as there are buyers to buy at even that price, there is nobody can yet say that there's a slowdown hitting soon. In Bangalore, you're right that the concern due to IT industries, whatever global headwinds are coming, due to which there have been some concerns in the longevity. How long will this cycle of price rise continue? There's also a concern. However, as we speak, the slowdown in price rise has been barely in 1 or 2 markets. Hyderabad and Bangalore are the only 2 markets where some kind of a price stabilization has come about in last couple of months. I'm sorry, it's the festive season. We have seen prices remaining flat, especially in Bangalore and Hyderabad. In Mumbai also, we have seen prices actually notching up. And Gurgaon, everybody is aware how people are lapping up the super luxury high-end products, and where there is a price rise again. So net price remains a big concern because affordability is a big question right now. Most of them can't afford to buy at those prices. So somewhere it will break. But where is that break point? Nobody can say. A month or a quarter or a year away. but there is a huge concern, and that is actually slowing down the velocity of growth. The growth of sales is actually slowing down. As I was talking about what when we answered the first question, the transaction numbers are flattening, which was for last 2 3 years. It was actually the rate of growth itself was stupendous. That's actually now slowing down a little. So with that price, the number of transactions slowing down, we are definitely expecting the price rise to also come to a standstill, and maybe a downward trend shall begin soon,
Yeah.
but not that soon yet, Alex.
Okay. So important point that you're raising. My last question has to do with supply. And in these instances, what generally tends to happen is that there is a buildup of inventory. We've seen it in past cycles as well. But at the same time, you're seeing a pretty decent pipeline of supply coming through from the major developers. So my question to you is, heading into the end of the financial year, do you anticipate that the supply will remain as robust as it has been in the recent past in those pockets?
Look, typically new launches are the big concern, because once a project is launched, it's out there. It's like you have actually taken that step, and now that inventory will come, if not in 2 years, but 4 years or five. Right now, the launches and the existing inventory put together, we are in these top 8 markets. When we're talking about, we are in the range of about 8 to 8.5 odd lakh apartments to be sold. And let's not forget that we have last year we have sold about a 4 odd lakh apartment, 3.85 odd already sold. So what we are looking at is the overall inventory not crossing more than 2 years to sell is the key point to remember. That if at all, if there is no apartment coming up to be sold in next quarter or two, you would have exhausted all the inventory in 2 odd years. That's a great place from the developer's perspective. You are in a very good place. So the new launches are to be very carefully calculated and kept a tab upon, and that is not worrisome. Even this last festive season, we haven't seen a huge new inventory hitting the market, and that's pretty much democratic in all these top 8 cities. We haven't seen that trend changing, where the supply numbers have overgrown the demand and transaction. So net, 2 years of inventory remaining in the market is a good news for developers. The moment it crosses 3.5, there is a huge concern for the market, but that still is long way to go.
Okay, all right. On that note, thanks so much, Ghulam, for joining us on this Saturday, and pleasure speaking with you as always.
Thanks a lot, Alex. Take care.